All right, good evening to everyone. Can you hear me loud and clear? Is my microphone working? I'm gonna launch a poll. All right, it seems like it's working fine for everyone. All right, so good evening to all of you and welcome to our webinar for tonight. I'm your host, Brian from Philip Capital. And before we start the actual webinar, I'm just going to bring all of you through a really brief introduction to Flip Capital and the services and products that we provide. All right, so let's just get that out of the way and let's start. All right, so this is just a disclaimer that this presentation is only for general educational purposes only and is not any form of investment advice. If you wish to make any investment decisions, you have to seek out a qualified financial advisor because investments carry risk. Hence, PCSB is not liable for any investment decisions that you may make based on this presentation. All right, so Philip Capital was actually incorporated on the 7th of October 1995 and is a wholly owned subsidiary of Philip Capital Holdings and Berhad. Formerly, we were actually known as Philip Futures because we offered futures as well as CFDs, but recently we have incorporated stocks into our array of products. So we have rebranded our name to better give a view on the services that we provide. Now, we are a trading participant as well as a participating organization of Bursa Malaysia, and we are also a holder of the Capital Market Services License, which means we are legally allowed to provide these services and products to you all. All right, so we have 11 Flip Investor Centers across Malaysia. So we have our headquarters located in Kuala Lumpur. If you are nearby any of these states or branches, do drop by to our offices to say hi. The staff there won't bite, all right? All right, so this is the Bursa Excellent Awards that we have won throughout the years. As you can see, we have a long track record that is quite beautiful. Just recently in 2022, we have won the first runner-up for Best Retail Derivatives Trading Participant, as well as the second runner-up for the Best Overall Derivatives Trading Participant. So this is a really decorated track record from Bursa, with Bursa, sorry. All right, so here we have a really wide global network being situated in around 17 countries all across the world in many nations like Singapore, we have the US, we have the UK, all the way to Asia like Japan and Singapore, and also to Thailand. So we have a wide reach, and this allows us to have a wide global coverage because we offer products from many different exchanges like the CME Group in the US, CBOT, COMEX, NYMEX. We also have Eurex and ICE from Europe. We also have JPX and TOCOM from Japan, as well as HKEX and SGX from Asia. And what that means is that if you are interested in trading any of the products listed on these exchanges, you can do it through us. All right, so we are your one-stop solution for trading because we offer many products, right? We offer futures, things like index futures, agriculture futures, metal futures, right? To equities or stocks such as local Malaysian shares, to foreign shares like shares from the US, Hong Kong, Singapore, and Australia, as well as the good old contracts for differences. We offer local CFDs as well as foreign CFDs such as the NYSE as well as the NASDAQ. All right, so we are your broker of choice because we offer 24-hour broking and execution support as well as advisory services. We also constantly update our clients on the latest market trends as well as a provision of a wide array of products, right? So we also have a free and hassle-free online account opening process if you are interested in trading with us and opening an account with us. All right, so we have this segment, which is Learn with Little Capital, where we offer free one-to-one coaching sessions, free seminars and webinars, as well as a free account opening process. Right, so for the free one-to-one coaching sessions, we will mainly bring you through an introduction to futures or CFDs or stock trading, and we'll provide you the basic fundamentals of product knowledge, and we'll also give you a walkthrough of our platform coaching, which is our charting system that our clients use. So if you're interested in any of our upcoming seminars and webinars that we offer for free, do scan this QR code to keep up to date with our events in the future. All right, so we also have the weekly market calls. We have free market news and updates on the left, which is conducted by our analysts every Monday at 11:15 a.m. As well as the live counter technical analysis by our technical analyst Jeen Hao every Monday at 8 p.m. So if you're interested as well, do scan this QR code or at least snap a picture so you can save them there on. All right, so let's move on. Okay, so if you are interested in any of the products listed as well as our services, you can scan this QR code and enjoy a hassle-free aligned account opening process. And if you have any questions, don't be shy, just reach out to me or any of my colleagues and we will assist you the best that we can. All right, so we have arrived at our trading platforms. So first off, we have Philip Nova, which is the platform that our clients use to trade futures. All right, we have like many different cool things and gimmicks, like 90 technical indicators, and you can buy and sell from the charts with ease. All right, so moving on, we have the Holmes Global 2.0 MI, which is our stock trading platform for clients who are interested in trading stocks. And last but not least, we have the Flip CFD Trader, which is the platform that our clients use to trade CFDs. All right. Right, so these are our upcoming promotions currently ongoing. We have First Trade and Earn with Philip, where you can get a chance to win things like an iPad, AirPods, and Apple Watches, and also touch and go reload pins as long as you reach the minimum trading brokerage fees. And next, we also have the US index CFDs. You can trade them at just $2 USD today. So scan the QR code for more information if you are interested in trading CFDs with us. All right, so let's get that out of the way and introduce you to our speaker for tonight. We have Mr. Jeen Hao, founder of Street Finance, and he has been through a long journey in trading. He began investing at 19, and as a position trader, he follows trend trading strategies to capture market trends. Right, his street trader philosophy promotes mobile trading, shared through his program called Street Trader Intensive. Right, he is recognized in the Britishpedia Biographic Encyclopedia, Successful People in Malaysia, 3rd edition, and his expertise has been featured in various media outlets, including the popular Borneo Post as well as the Chiew news outlet. Jeen Hao is a sought-after speaker at Bursa Malaysia, major banks and universities. Hence, we are very delighted to be able to share this series with him. His participation in conferences like the Growth Summit 2019, as well as the Traders Fair by FinExpo, left a lasting impact as his trading approach requires minimal monitoring and avoids speculation as much as possible. So I won't take too much of your time. I will pass it back to the start of the show, Jeen Hao, for tonight. And I wish all of you guys the best session that you can ever have. You are up, Mr. Jeen Hao. Thank you.
All right, so let me just check if I share the right screen. Okay, so
yeah, this is the
okay,
right
it is
screen.
a full screen. Okay, cool. All right, thanks, Brian. Okay, so hello everyone. I have to turn off my webcam because I face a little bit of difficulties when it comes to this GoToWebinar platform, but nonetheless, audio is great, I believe. So let's just kickstart everything, okay? And start with the juices of today, okay? Kickstart your stock trading journey with trend following. So that's the topic for tonight. And yeah, just a rather quick disclaimer, whatever stocks I mention later, okay, and strategies, okay, everything is just for educational purpose only. So there are no buy and sell calls in the event that if I mention some stocks. So this is me, Jeen Hao, and Brian has already done a rather good introduction. And let's just don't waste too much time here. All right, so feel free to follow me on social media, especially Instagram, which is where I'm most active, Facebook, okay, Twitter, so on. All right, so here are the things that I'll be covering tonight. The first one is trend versus news. Right, trend versus news. Which one should you follow? Now, the question that a lot of people ask recently is, uh, the Israel and Palestine war. Okay, what are the things that will be affected? Okay, whenever we talk about war, okay, then people will link it to crude oil. Okay, and then some people say, then hey, oil and gas stock can buy or not? Then people always have this kind of they try to join the lines by themselves. Okay, or it's like budget 2024. Okay, what are the stocks that we can buy? Things along those lines. So I'm gonna explain, trend versus news, which one you should be taking more, putting more attention on and emphasis. Second is what is trend and why you should trade with the trend. All right. So third is how to analyze and follow trending sector. For this, I will be launching my trading view later on. All right, and show you the sort of like the live things that is happening. Okay, the live thing that is happening right now, or maybe I just can use chart nexus as well. Okay, it's okay. So let's move on to the next one. Okay, and sorry, the next one is how can you structure your trading plan? Okay, I think this is the most important thing, because if you want to trade, you need to have a trading plan. And this 4-step T.E.S.T process is going to be something that you can use, okay, to structure your trading plan, meaning that every time when you want to enter any position, this is a 4-step that you have to think about it and follow it. It's like an SOP. So how would stock price react to news? Now this is back in 2021, whereby the company called Sapura Energy, okay, and the headlines goes like this: Sapura Energy secures 6 oil and gas contracts worth 1 billion. So usually these kind of things, okay, come out. People are going to judge things, okay. People are going to buy or sell certain shares based on the headlines, okay, based on the headlines. So how does this news, okay, is going to affect the price? So people would logically think that, oh, it secures 1 billion worth of contracts, is going to be beneficial to the company, okay? So it will, somehow increase the share price, or at least has a positive impact on the share price. And that is based on logic. But the unfortunate thing is that the market is never reacting anything based on logic. So you see, this was when, okay, the news is being announced. Okay, you can see that the price, what is like what, 13 cents to 14 cents. And then after the news announced, basically the stock prices go lower. Okay, so look at the trend. Okay, it's downtrend. So if it is a downtrend, then usually it will follow. Okay, so don't buy based on any kind of hypes. And entering 2022, basically this stock just go lower and lower and lower and lower. So where is that 1 billion contract is going to take effect? Okay. Instead of asking the question, like people say, why get 1 billion and then, you know, the price is not going up? Why the result is good, but the share price is not going up? Now, I don't like to ask why when it comes to stock trading, because when it comes to stock trading, I buy the share, I hold it for a few weeks to few months, then I'm going to forget about the share and take whatever profits and loss away. And there are just so many stocks in the market. Okay, Malaysia, you have close to 1,000. Okay, like 900. And then you have US, you have Hong Kong. How are you going to, being able to enter so many, go and understand so many things and go and ask all the whys? It's going to be a waste of time. Okay, to me, it's going to be a waste of time. So again, good results versus stock price. This is back in 2021, whereby, Top Glove, they are still announcing great results, but why the price is not going up? And in fact, it is going down. Now, you might be saying, okay, because there is a lot of hypes and things like that. Okay, the good result is already been factored into the share price, or when the result announced, there is less of the earnings surprise, people already expected it, or it is slightly below the expectation, that's why the share tanks. Now, to me, as a position trader and a trend follower, I'm not going to explain too much. I'm not going to judge whether your explanation is correct or wrong. The only way I'm going to analyze is the stock in an uptrend now or in a downtrend? If it's in a downtrend, I don't care. I'm not in the stocks. That simple. Okay. So here are some things to consider. Now, news doesn't matter. Whatever announcement doesn't matter. How people react to the news matter. Okay. How people react to the news matter. So you see, just now I was, before the webinar just started, I was having a conversation with Brian. I say, gold, gold is usually being perceived as the safe haven. Okay, it's usually being perceived as a safe haven. But fundamentally speaking, gold and US dollar have an inverse relationship. But I was telling Brian just now, in the event that there is any kind of fear or there's a war, okay, you can throw the DXY, okay, the US dollar index into the dustbin. Okay, it doesn't matter anymore. How people react to the news matter. That's everything. Okay, so again, what matter is how people react to the whatever incidents that's happening. Now, in the event of gold, okay, it's still very relatively predictable. But when it comes to stocks, okay, you never know. Okay, you never know. And then a lot of times results, news can be manipulated. Okay, so you never know if the company is trying to hide something or trying to delay some announcement because they want to accumulate, I don't know, okay, anything. Okay, because what I know is, if there is a will, there is a way for those people to hide something. Now, however, the important thing is there are no ways to know how each and every player in the market thinks about the news. Now, you might think that 2 billion profit for this company is a lot, but there might be analysts out there thinking that 2 billion is a little bit under their expectation. How are you going to have an idea, or how do you judge like 2 billion is okay, or it is good, or it is not so great? Even if you think that 2 billion is a lot, but there might be some institution or fund managers on the other side of the screen thinking that 2 billion is not enough for this company, and they're going to sell it after the news is announced. then you're stuck in the stock. All right. So therefore, everything is just a guess. Okay. An educated guess is still a guess. So people's expectation has been factored into the price. Okay. This is always a thing. A lot of things is already priced in, especially when it comes to forecasts and things along those lines. And also, how about insiders movement that we never know? You might think that, you know, insiders movement is dirty, but it is what it is. We are in the stock market. You cannot deny that stock market over the long run, it is still the best asset class that produce the most return. Okay, at the most generic level. So regardless what's happening, big buyers and sellers always leave footprint in the market. And what are those? They are price and volume. Okay, if the stock has been dropping for the past 2 weeks and the volume is somewhat significant, okay, when you open the charts, the volume bar is not like very low, it's average to, you know, above average. When those big buyers and sellers leave the market or enter the market, they leave footprints. Okay, if you don't agree to me, let me ask you, how can a person enter into a stock like in Malaysia, especially in like small market, like buying like, I don't know, 10 million worth of shares without leaving footprint in the market? It's close to impossible. Unless every day they buy like 100,000 unit, I don't know, okay, and then they accumulate for like 3 years. Or else, okay, they're always footprint. Whether you like it or not, they are footprints. And technical analysis assumes that all known fundamentals are already factored into the price. Okay, this is things that I think sometimes are too underrated. Okay, it's like sometimes people ask me, hey, why this stock keep dropping? Okay, it's very simple. Okay, there are people who are selling. Then some people ask, why are they selling? You ask me for what? I'm not those people. Okay, when there are people who are selling the shares and the share price is going down, finding out the why will not make you a better trader. That's the fact. Okay, a lot of people like to argue like, oh, if you understand why people sell, then you're going to make a lot of money. You cannot. Okay, you just cannot. Okay, how are you going to know that all the sellers in the market and you're going to interview them one by one? It's impossible. Don't think about it. What you have to focus on is the trend, price, and volume, which is trend plus price action. That's the most important thing. So the next thing that we have to talk about is what is trend and why you should trade with the trend. Okay, I think I think you guys cannot type anything in the chat because I think it's being locked or go to webinar usually have some issue. Okay, but anyway, did you encounter such situation? The first situation is you look at the stock price has been dropping and it looks cheap. Whatever your eyes choose to believe, you believe that it is cheap. And you buy the stock. However, the stock just becomes cheaper and cheaper. Now, do you face this issue before? Have you faced this issue before? Okay, so the next is you look at the stock. The stock price has been going up. Okay, the stock price has been going up. Okay, wait, something happened in my. Okay, and you feel like it is very expensive, and you feel like you are late for the party. Okay, you end up not buying it. However, the stock price just moves higher and higher and higher and higher, and you always feel like last week or last month was the best time to buy. Now, if you answer yes to any of these two questions, then you have to know that that's because of trend. Trend usually continues rather than reverse. All right, that's the fact. And follow the trend, you're going to follow the smart money. So the core belief of trend following is that the trend is more likely to continue rather than reverse. And an uptrend has a higher probability to go up, and a downtrend has a higher probability to go down. Okay, that's the truth about trend. Okay, a trend is your friend until it bends. So trend traders or trend followers will look into going long in an uptrend or looking into going short in a downtrend. Of course, when it comes to the stock market, I only encourage people to be a buyer. Okay, I don't encourage people to go for intraday short selling or IDSS. I don't usually encourage people to go for short selling in the US market because, you know, there's one thing that we got to understand is that stocks in general is designed to go up in long term. No one lists the company hoping that it will crash to zero. No one. Okay. And if you buy a stock at 10 ringgit, for example, or $10, for example, the upside potential mathematically is infinity. A $10 stock can go to $20 and you make 100%. It can go to like $30 and you make 200%. It can go to like $100. We have all seen Top Glove going from like 5 ringgit all the way to 30 bucks. We have all seen Tesla going from nothing to something and right now leading the market. But how many of you, or how many, you just ask yourself, how many times you have seen companies go from like 3 ringgit to 10? More than 100%. Okay, like from 1 ringgit or $1 to $10. Okay, we have seen a lot. We have seen Apples, we have seen, Tesla, we have seen, Top Gloves and all the glove. But how many times have we seen stocks crash to zero? Okay, think about it. Okay, think about it. So to me, going long has very huge upside potential, granted you follow the trend and you manage your risk accordingly. And going short, your max return is of course going to be 100% only. And again, I ask you the question back, how many times you actually see a company crash to zero? Okay, so understand the probability of both sides. So that's why I said focus to be a buyer in the stock market. Okay, so this is an example of uptrend. Okay, and this is like one of the hottest stock. Okay, one of the hottest stock in Malaysia this year. Okay, so it is YTL. All right, so the trend has been really good for the year, but of course at a point of capturing this screenshot, it was still okay, and we know that today it drops, but nonetheless, okay, this is another one called SP30. Yeah, you see, the trend is always your friend until it bends. So YTL bends already, but how long have it go up? Okay, how long has it go up? And for SP30, okay, I think this was being captured on, let me see, October 3rd. Today it bends as well. But see, how far has the trend gone? It gone up by like 100%. Okay, 100%. And of course, there are ways to manage the risk on how you can manage your positions when it drops. Okay, later I'll be sharing with you, so no worries on that. All right. So this is another one. Okay, this is Google. Okay, Google. So again, Google is also an example of uptrend. All right. So at a point of capturing this screenshot, the price was 135, and right now Google is 141. Okay, 140 to 141. So again, right now, the little unfortunate thing is that Malaysia market is kind of choppy and weak a little bit. Okay, but for the most part, if you have been in the market for the year, you know that what are the stocks that keep going up and up and up and up and up. Okay, so the key is to follow the trend. Okay, the key is to follow the trend. So how can you analyze and follow trending sectors? Because we all know that, okay, stocks go on trend, okay, and they move in groups. So how can you analyze, like from where should you get everything started? So there are a couple of things that you can look at when the entire market is very hot. You can look at major indices like DJI, S&P 500, and NASDAQ. So NASDAQ represents the technology sectors or market, and also sort of like the growth company. Okay, growth company. S&P 500 represents like more like the market, overall broad market. DJI, which is the Dow Jones Industrials, represents more like the traditional sectors in the market, like industrials, like those defensive stocks, like bankings, like oil and gas, energies, and things along those lines. All right. So now in Malaysia, it is easier in a way that we have different sector indices, like technology, industrial products, plantation. And also sometimes in Malaysia, stocks can move in group, like for example, export related, okay, glove sectors. Okay, now glove is technically under healthcare. Okay, but again, we understand that apart from the COVID runs, a lot of time, okay, glove will just move as glove. Okay, it will not it is less likely to be like, the entire healthcare sector go up. All right, so let me share with you something. All right, so this is the chart nexus. This is free. It is free for you to download. Okay, so let's look at this one. Now, there are sector indices, okay, in the market. So let's go through one by one. So first one is construction. So we can see that construction is in an uptrend, right? Construction is in an uptrend. So that's why if you look at construction, then maybe you want to look at Gadang, all those, okay, construction stocks like Suncon, okay, Suncon, Econ Berhad, all those stocks. All right, so these stocks have been in an uptrend. That's why the construction sector index has been going up. And consumer products, you can say consumer products is relatively weak. Okay, so next, energy. Like some people ask, how about oil and gas stocks? How about energy stocks? Then probably you look at the energy index first, and then you decide from there, okay, whether you should be looking into the energy sector as a whole. This one is Malaysia only, okay, and then you can go to okay, FBMKLCI is basically just the big caps, okay, the big caps. So big caps, you can see that is basically in a ranging, coming down, go up again. Okay, it's kind of boring. Okay, it's kind of boring. Now FBM 70 is the mid 70s. So you can see that the mid 70s in Malaysia market is actually trending up, and I would say it is not too bad. And FBM ACE is the ACE market. So those are the penny stocks, okay, or what we call the pink color stocks, okay. So you can see that FBM ACE is not in an uptrend. So that's why I wouldn't look at penny stocks in the market for the most part, at least for now, unless it is in the construction sectors, for example. Okay, and then what else we have? Okay, so let's look at other like small cap. So small cap is going up. So FBM 70 and small cap. So these, okay, at the most aggregate level, I can say that stocks that are not the top 30. Top 30 are your Maybank, Public Bank. Those mid 70s and probably some of the stocks that are usually priced in between like 2 ringgit to like 10 ringgit. All those stocks are going to be very interesting, okay, and good to watch. Okay, so definitely not the penny stocks. And let's look at financial services. You can see financial services, a lot of time it just go along with the FBM KLCI, which means that right now it should not be, it's not trending per se. It's not weak and also not so strong. Okay, so it's, at least it is not trending or not the most trending. Okay, and healthcare are your top glove, okay, your medical and things like that, okay, is downtrend. Industrial product, kind of like moving up a little bit here and there, okay, might want to take a look. And you can also look at plantation, it has been going sideways, so usually I would not focus. And property is the one that, has been really rocking. But here, of course, we all see a problem. Okay, what is the problem? You can see a property, which is something that has been, supporting the market. What we see is the price go up, down, and then it falls down. So it seems like it finds a resistance here and then is moving down. So if you're going to break this level, I would say that Malaysia market is going to be a little bit challenging. Okay, it's going to be a little bit challenging. So again, as it breaks and close below this EMA, I don't think it's going to be great. If it close below this level, I think that I can almost say that is almost close to game over. Okay, for property. So but compared to construction, okay, construction, the fall is not as drastic as property, but of course we know that these two goes hand in hand. All right, so REITs, not really a good one. Technology, okay, like your MPI, Inari, and all those things that are under technology. So it is not trending as well, it's going down. So your MPI, your Inari, your Penta, okay, all these are going to be not that great. This one, okay, these are just, not really in the good shape. Utilities, basically YTL Power tanked this entire index. So these are how we can, uh, analyze and get an idea what should we be focusing on in the market. Now, for the past, let's say, couple of months, let's say by June, July, okay, some people say, of course, right now it's already like going up, you say like this, of course it's trending. But let me ask you a question. If you already see this, okay, like on July, okay, you see that property is going up and up and up and up and up and up. If during that time you slightly focus more on property stocks, can you make some money? Okay, if for the past couple of months you focus on construction, can you make some money? Okay, can you make some money? That's a question to ask. So again, from here you need to see what are the potential things that might come up in the market and what are the trending ones. So of course you can look at, some of the previous stocks. This one of course going down already. Like, okay, let's say energy, like people are very enthusiastic when it comes to energy stock. Okay, and then they will say, okay, is Heng Yuan okay? Because energy looks like okay. Then you only look after you have identified that energy could be the potential play in Malaysia. Okay, then you look at individual stocks. But when you look at this Heng Yuan, it is still in a downtrend. Again, downtrend has a higher probability to go down. So that's why usually as a trend follower, I will not look at it. Okay, but what about others? Okay, like Dayang, for example. Dayang is the one that is going up. Okay, it's going up and it has been going up, but of course right now it's a bit weak. But let's say if it can breaks and create a high, okay, if it can breaks towards the upside, then that's a sign of trend continuation. Okay, that's going to be a sign. That's going to be the sign of continuation. And what else? Let's look at Armada. Okay, Armada. Not really a very interesting. Okay, previously, it gaps down. So when it comes to gaps, this is going to be the resistance. So, you know, not going to be a good focus. And let's say dialogue, you see that it is also in the downtrend. So probably, you know, among all these energy stocks that I have talked about, maybe, okay, Dayang is the one that you should be watching. All right, you should be watching. And let's look at, you know, some of the construction or property like Suncon, okay. Sunware is dropping. Let's say UEMS is, I think, the champion. Okay, UMS was the champion, but of course we know that it has been dropping. So it is an awkward situation right now because, you know, in Malaysia there are a lot of stocks that are dropping, but remember this: always start from the sector indexes, okay, like consumer products, like this one, like energy, okay, and then from there you do the research, okay, you do the research on what are the companies that are within that industry. Now, another thing that you can look at, okay, another things that you can look at is top gainers, okay, is top gainers, okay, this one, top gainers. Now, don't look at the what, the top gainers in percentage, okay, because you're going to see a lot of penny stocks and warrants. Look at the one in dollar term. Now, if for the past few days you have been keep seeing certain stocks pops out, then you need to pay some attention on the stocks. Okay, if you keep seeing the same stocks, okay, like out of 5 days in a week, it appears like 2 to 3 days in a week, then probably you need to pay some attention on it. All right, so this is, of course, one important thing that I always tell people. All right, so again, few ways of analyzing the market. Okay, few ways of analyzing the market. Of course, there are a lot more ways you can use. Okay, there are a lot more ways that you can use, like using screeners and things along those lines. Okay, like one of the popular thing that people like to use is this one. Okay, screeners. Okay, so you can screen stocks that are at year high right now. So let's see if there is any. So from there, you can see what are the sectors or categories that might look, you know, interesting to you. All right, so this is also the things that you can use at your advantage. All right, so again, for Malaysia, I think a lot of people know this, okay, Malaysia stock screener. All right, so there are a lot more things that you can do with this. So this is just another example, but to me, I like to start with sector indexes. Okay, sector indexes, then only, okay, I go and see what are the trending sectors, okay, or trending individual stocks, okay, that might be interesting. Okay, so now, last thing that I want to cover for tonight, okay, which is how you can structure your trading plan with the 4-step T.E.S.T process. Now, this one is my SOP when it comes to entering stocks. Again, I repeat, this is my SOP when it comes to entering stocks. So, how does that goes by? So, the T.E.S.T process is this 4-step trend. So the first thing, you got to have trend. And in the market, we only look at uptrend in the stock market. Okay, we only look at uptrend. I don't like purple. Can I have other color? All right. Okay, uptrend. Okay, then the next thing is we find entries. Okay, we find entries. And when you have entries, you must have stop loss. Okay, so this is first step, second step, third step. Now, if your stop loss is hit, then you don't have the fourth step, which is either taking profit or trailing stops. All right, so the very first thing to me is it must have a trend. So if the stock is like this, Okay, no trend, I will not enter. Okay, so trend is the most important thing in the market. Now, I understand that right now in the market, you might be get a little bit, discouraged or like feeling that there's nothing to do. But let me just share with you, trend following in the market never fails. Okay, trend following in the markets never fail. Why do I say so? So let's say, okay, I like to use this example, top glove. During the COVID time, okay, how many percent it actually gone up? Let's say this is the break of structure. If we take this as a break of structure, up until the top, okay, let's say somewhere around here, no need to be the top lah, okay, roughly there, it went up by 296%. Now, of course, I'm not saying that you have to enter and make 296%, but what if you can enter here based on a breakout, okay, or enter here based on a breakout until it come down here, okay, fails to form lower, higher high, comes down, you sell here. You also get like 46%. Okay, you also get like 46%. How about Hatta Lega? Okay, Hatta Lega. So same thing. Okay, when a trend wants to come, let's say somewhere around here. Okay, I remember this because this was my exact entry. Next candle I buy, and then here I sell. 43%. Okay, this was my second entry. First entry was at 690. So again, when a trend comes, the entire trend can be a lot. Okay, the entire trend can be like, few 100%, like even like YTL this year. Okay, YTL. Okay, breakout. Okay, next, if let's say you enter after the breakout until the high comes down, fell to form high and come back down, 47%. Not too shabby. And also during the COVID time, a lot of people, focus on glove. Okay. Now let me just share with you one thing. During that time, glove is not the most profitable sector. A lot of people don't know. Okay. In 2020, glove is not the most profitable sector. Now, if you look at Gretech, back in 2020, the COVID crash, go up. This is the most profitable one. Okay, the most profitable sector. It went up 240%. Okay, and up until here, 2021 is a continuation. 500%. Okay, these stocks I traded since like this IPO era. Okay, and what about UWC? I'm not sure if you all heard of these stocks before. Okay, during COVID time. Okay, somewhere here I remember 282 I buy up until here, 450%. Of course, you don't see two ringgit plus here because it's adjusted with the bonus issue. Okay, from here to here, 400%. What else? During that time, like stocks like Inari, okay, is also going up. Here, Inari. Okay, go up, break structure until here. Let's say it breaks down, 100%. Okay, and let's go back like many more years. Let's look at some of the stocks, JHM. Okay, we go back a lot, like 2017. Okay, 2016. These stocks, okay, literally go for nothing until a gaps and go sideways for like almost like, I don't know, like almost a year. It goes up, break. entire trend, 900 over %. Okay, so right now, of course, we don't see these things because at least for Malaysia market, we don't have the catalyst. Okay, we don't have the catalyst in the market. But what about US? Okay, what about US? Okay, so again, the primary focus is to find trend. Okay, is to find trend. So this is the stock that I hold quite long for this year. Okay, I hold quite long for this year, and of course, right now already sold. So you can see if a trend can go up, let's say here you are not sure, okay, and then it goes up, okay, you find entries. Okay, first trend, second entry, put a stop loss, and then you just hold. Okay, now let me just show you. Okay, the entire how can you plot your entries, and I will show you a little more example. Okay, now let's say if this stock here, you can see that it starts going up, and the first thing that you want is a trend. So you can see that it goes from like 50 cents all the way to like 60, 70 cents. Now, my rules of finding uptrending stocks, if this is your screen, the price must be at the top right corner. Okay, meaning that the stock must be like this. Okay, at least like this. Okay, the stock cannot be like this. Okay. No, this is not at top right. This is at bottom right. Okay, so these are my rules. Okay, so first thing, it must be at the top half. Okay, the top right corner. Second thing, I prefer 52 weeks high for a minimum. 52 weeks high. If not, all-time high. Okay, I prefer. Or else, your EMAs must be in sequence. Okay, EMA must be in sequence, meaning that your EMA 20 must be, you know, above like 40 or 60, whatever EMAs you use. Okay, they must be in sequence, telling you that it is in an uptrend. All right, so the next thing is what you need to find is break of structure or break and retest or continuation buy. Okay, so break of structure means something like this. Okay, it's a sideway break, this break of structure. You enter based on the breakout, or you wait for a retest, go up, then you enter when the retest happens. Okay, or continuation buy, meaning that you can see that it goes up, come down, go up, you buy here, set a stop loss down here, go up, come down, rebound, buy here, set a stop loss below. Okay, so this is how you enter based on continuation buy. Continuation buys looks like this. Okay, so let me give you an example of a continuation buy, which is this one. So you can see that it went all the way up. Okay, this one is more like break of structure. So during the day, the price go all the way up. You enter here. This is your entry. Your entry. Your stop loss is below the sideway here. So this is your stop loss. Okay. Break. Entry. Stop loss. Okay. So this is the example. Okay. Now the next thing, of course, is you can, if there is a trend line that you can draw like here. Okay, not accurate. Wait, something like, let's say if this is something like this, you break, you enter, you set a stop loss below. Okay, so or continuation, rebound, enter, stop loss. All right, so Okay, so these are the examples on how you can plot everything. Okay, so let me just show you this. Okay, let me show you this. Okay, so first thing, when you see this stock, okay, you look at this, okay, it come down, okay, you take at least 1 year lah, okay, 1 year. So from January until 2023 January, it goes up. So when it goes up, what you can do is you wait until you see like, okay, goes up, come out, okay, rebound. So if it rebound, then I'm gonna enter. Okay, let's say here, what I'm gonna do is I enter right here, a long position, right here, rebound, and then I place a stop loss below this swing low if you can, or you use EMAs, you put below your EMA 20, which is somewhere around here. So you just follow your plan. Okay, you just follow the plan. Yeah. However you want to hold. So again, it is actually not a very complicated things. Okay, it's not a complicated things. If it hits stop loss, then you have to revisit the structure. Okay, you have to revisit the structure. If this is too messy to you, this is going to be clear. Okay, like what you're going to focus is only this. Okay, it's only this. If it stays above EMA 20, it means that the trend is very strong. So again, you see a retracement here. When it rebounds, buy. Set stop loss down here. Okay. Yeah. Basically, that's what you have to do. So again, just following trends. Okay, just following trends. Now, right now, Malaysia market, not a lot of stocks for you to do so. Okay, but remember, you know that Malaysia market sometimes very cyclical. Okay, once a while you hear that, okay, this group of stocks, they go up, that group of stocks go up. Okay, the next team, we never know. Could it be glove? Could it be property? Could it be technology? Could it be, I don't know, right now Malaysian ringgit is like weakening. So USD to Malaysia ringgit is like 4.74. Who knows? Export sectors can be another theme. Like export sectors, what are inside? There are 4 things inside Malaysia's export sector. First is glove. Second is technology. The third is plastic packaging. And the next one is the wood and furniture industry. So these are the 4 main so-called export sectors in Malaysia. So you're just gonna focus on those. If you see all those stocks go up together, all right. So how about the next thing, which is what we call a trailing stop? Okay. Now let's look at trailing stop. Okay. So first thing, let me just repeat. If you see the stock is in uptrend, okay, what you want to do is you focus on finding a buy. So let's say this is a breakout and retest. You enter here. Your stop loss down here below the swing low. Your stop loss. Now let's say if the stock go up and up, your stop loss cannot remain here. So that is what we call a trailing stop. So you're going to move the stop loss based off this swing low. You're going to move based on this swing low. So what you're going to do is you're going to move your stop loss below this swing low. Below this swing low, then it becomes a trailing stop. Okay, so you go up, move, trailing stop, move, your trailing stop. This is what I call a trailing stop. All right. So there are 4 steps. So that's why trailing stop is good. I don't know if you attend the previous 2 sessions. Okay, the previous 2, one of the sessions I mentioned about the behavior of an investors or traders, and we talk about the quadrants. Okay, we talk about quadrants. So what's the quadrants all about? The quadrants is all about, how do you react to loss and profits. So trailing stop is the strategy that allows you, okay, to have bigger profits when you are in the trade and that thing is in the trend. You don't need to have a lot. If 1 year you can find one stock and you trail all the way, you're gonna be okay already. Like for example, YTL. Okay, YTL. Okay, so YTL, how do you know that it is, starting to make a move? When you see the stock starts to move and the EMA 20 cross above 50 and the 50 cross above 100. So this is when you know that this stock is in action. So usually what I will wait is I wait the stock to retest the EMA 20 or at least near to the EMA 20 like this. Okay, can you see that? Like this. Okay, so what I will do is I will enter based on a rebound. So if I see any price action shooting up, okay, I will enter. So exactly this. Okay, it's very nice. It rebound right at EMA 20 and then it just go higher and higher. So what you do is, so for example, when the stock is here, okay, you will buy at whatever price. So let's say if it cross here, you buy because if you look at line chart, this is like a breakout. Okay, break this and this. So of course, it breaks this, you can buy a bit here. If it break higher, you buy you top out your position or whatever. So let's say this, your entry is at 68 cents and your stop loss is at 65 or 64 cents, so which is less than 10%, and I like it. Okay, so it goes higher and higher and higher and higher. So if let's say if the stock already go from like 68 cents to 70 cents or 78 cents, the risk reward, okay, when we talk about risk reward here, so again, you buy here. Wait, let me just detach this. You buy here and your stop loss was here. Okay, so now when the risk reward has already gone up to like 1 to 2, I will not leave my stop loss here. I'll move my stops based on this new low and I'll place it below. So this trade eventually just become risk-free. Okay, so as it moves up, when it creates a swing low, let me just delete this. Okay, so a lot of people, when it comes to this, okay, oh, it shoot up, they will take profit already. Like 1 day, wow, 1 day, okay, 1 day, I don't know, like 10% is already very good. Okay, you buy at like 68 and then you sell at 75. Okay, 1 day 10%, very good. But again, this is when a lot of traders, they get into the stocks, okay, but they never hold until it really shines. Okay, it really shines. So what I will usually do is I trail the stop loss up, so you can see that. Okay, you can see that this is like a, okay, this is like a what? A new continuation buy pattern. Okay, like this. Swing low, put your stops here. Go up, swing low, put your stops here. Okay, so remember this pattern. Remember this pattern. Okay, so what I do is move up somewhere below here. Okay, yeah. Okay, and then next goes up, come down. Okay, not a swing low yet before the highs are broken. Okay, go up. Okay, almost a U-turn shape. Okay, of course you can trail all the way up. Okay, so oops, almost. Okay, then go up. Okay, so again, just leave it there. Go up. Okay, enter. Okay, you move it. Okay, let's say like this. You want to move a bit, also okay, to protect a little bit of your profits. Okay, here. Okay, another swing lows. This one swing lows, we put below. Okay, swing lows, put below. Okay, let's see if this is hit. Nope, nope, nope. But if you are afraid, okay, you can move your trailing stop upward. Okay, okay, hit. Something like this. So this is swing low. Or you can have simple rules. Okay, You can have simple rules like I just use EMA 20 to trail. If the stock does not close below EMA 20, I don't sell. So this one it closed below, but the next day it go up. So maybe you're already out, but what if, okay, you haven't, okay? It's like you're already out, but the next day it goes up, you didn't sell, okay? Then you continue to ride. Usually, if I were to trail based on EMAs, when it closed below the EMAs, the next day, if it's still open rest and breaks the previous candle low, like this one, if you trail based on EMAs, okay, you see this candle, this candle closed below the EMA 20. The next candle breaks this candle low, then I will sell. Okay, so this one is not. Okay, because the next day, it didn't go below. All right, so there are a couple of ways to guide you, but you get the idea. Trailing stops is something that can guide you from exiting the stocks too early. Okay, from exiting the stock too early. Okay, and also stocks like Apple. Okay, and stocks like Apple. So again, Apple, this is a break of structure here, right here. Okay, break of structure. You can see that break, retest, go up. So buy. So you can buy right here or right here or here. You set a stop loss below. You just move here, move below it, move below it, move below it. Okay, move below the swing low, move below the swing low, move below the swing low, move below the swing low. Okay, go up, come down, move below the swing low. And the nasty thing is it gaps. Okay, it gaps down. So you will get filled at this price. So again, from the initial entry of here until here, you still got like 18%. Not too shabby, but at least you don't rush out from a profitable trade. Okay, you don't rush out from a profitable trade too fast. Okay, what if it runs like another 30%, like what it did in the past? Okay, don't give a limit on how far a stocks can go up or down. Okay, this is the thing that I can show you because I can share with you because that's the essence of trend following. Okay, and using trailing stops, okay, as at your advantage. Now, you don't need to be like every trade you can trail like YTL or trail like, you know, some of the legend stocks like Hub Seng, like UEMS. You just need to, you know, let me just share with you one thing. If 1 year you can have the opportunity to trail any stocks, it's going to be great. Okay, it's going to be great. Okay, so hope that you learn something from this session. Okay, especially when it comes to trailing stocks. Okay, when it comes to trailing stock, because this is the most powerful thing that I would say a trend follower can use, or any traders out there. Okay, it prevents me from going out from a trade like way too early. Okay, like way too early. So I will open up for Q&A. Okay, I'll open up for Q&A. So if you have any questions, you can type in the Q&A in the questions box. Okay, in the questions box. Okay, I think there are questions inside, right?
There are questions. I can read them out for you if you want.
Yeah, okay, so
right.
I think that will be all for me. I will focus on some of the questions that the participants asked. Yep.
All right, so
okay. Yep.
now
You hand over.
right.
Hand over.
Okay, yeah, sure. I'll just pass it back to me real quick. All right, 1 second. Let me move things around real quick. All right, so wow, that was a very in-depth, like the end, especially the step part, the last part, that in itself is already a very in-depth trading strategy. So before we let Jeen Hao go though, I want to squeeze his knowledge a bit more. So we are going to have a Q&A section. If you have any questions, do leave them down in the questions box. But we already have a few, so I'll just read them out for Jeen Hao to answer. All right. The first one is, can you be profitable trading reversals only?
Okay, so based on my test, the probability of trading reversal, okay, is lower than following trend. Now, of course, it depends because sometimes, let's say post-COVID, okay, or the COVID crash. Now, during like April and May, every setup is reversal because the stock has been, crashing and bleeding on the floor. That's why during that period of time, trading reversal is the only way. But when they are in the market, okay, there are trending sectors and trending stocks, and then there are also stocks that are, not doing that well. Now, during that period of time, if you trade reversals, okay, the probability of winning is going to be low because now I'm going to understand one thing. Let's say you think about it. If all the institution, the fund managers, the big kaki, and the syndicates or whoever, if they are really putting a lot of money in, let's say, property sectors, you only have like limited money in the market flowing around. Do you think that trading reversal on those weak stocks are going to work while the hot money, the smart money are in other trending sectors? Think about it. Okay, so that's why when the market is trending, or the market has something trending, or the market has a theme, okay, like many years ago when the ringgit is weak, okay, Najib is still a prime minister, ringgit is weak, okay, then people use weak ringgit as an excuse, and then the export sectors went up. Okay, then COVID, people use COVID as an excuse for healthcare stocks. Of course, you can say it's fundamental, but to me, it's like every stocks, every sectors, if they want to go up, they want to do a big trend, they need a storyline. People buy stories. Okay, so, and if all the hot monies, okay, are in right now, okay, let's say for the past few months, they are all in the in the property construction sectors, and then you go and trade REITs, okay, technology. To me, it is less viable, and the probability of winning is a little bit lower. Okay, so that is my answer. Can you be profitable trading reversals only? The answer is yes, but for the most part, it may not be the best thing to do. Yeah.
All right. That was a very in-depth answer. I hope that answered your question from the audience. All right. So up next we have one, which is, oh, this is a good one. Where can we find correlation between sectors?
Okay. What I'm going to answer this question is going to be something that you wouldn't expect. Okay. So again, I don't find market has logic. Okay. If you always use logic thinking to trade the market, you will realize that you are not profitable. Okay. Now let me give you an example. Okay. For the past, okay, like I forget 2020 or 2021, FCPO, the crude palm oil price is going up. Okay, it's going up. Let me just double check. Okay, so during that time, when was the uptrend? Yeah, 2020 to 2021, correct. Okay, so during that time, okay, a lot of people say, hey, Jeen Hao, okay, FCPO prices have been in uptrend. So can I trade or speculate plantation stocks? Okay, then my answer is this. If the plantation stocks have no trend, then don't trade. To me, whatever has trend, then I trade it. If there is no trend, even if it is like FCPO and plantation stocks, I don't think they are very good or very like they are not perfectly correlated. Okay, so you can see that plantation FCPO, like from somewhere around like May, it went up from like 2000 to all the way up to early 2022 to around 7,000. Okay, now let me ask you, does the plantation stock that you like go up that much? I believe you cannot find any. Okay, you cannot find any. Okay, like probably only like end of 2021, the stock like FGV or what, okay, suddenly go up for a couple of weeks, then die. Okay, so that's not trend. That is just like people speculating and a meaningless move to trend followers. So why not you trade FCPO? Okay, that's what I love about Philips, because what Philips can offer you is, you know, you have Malaysia equity, you have US stocks, okay, Hong Kong stocks, they have CFDs, they have futures. Basically, whatever products that you want to trade, Philips, most of them, Philips are going to get you covered. And I don't like, you know, some people, once they are in stock market, Malaysia, Bursa, their brand is, you know, stuck inside the jail of Bursa stocks. Okay. And then I say, Bursa got nothing to buy. No good trend. Go and look at US stock market. And then I don't know why, but people refuse to do so. To me, if you want to be a profitable trader, you need to know how to find profitable trends and then trade that thing. So again, my story just now is the correlation between FCPO and plantation stocks. And my answer is, a lot of time the correlation is not even worth mentioning. Okay, it's not even worth mentioning. So when you ask me, okay, how can we find correlation between sectors? My answer is, don't waste your time. That is my answer, to be honest. All right, I'm speaking this from a practical standpoint. Okay, I'm speaking this as a practical standpoint. So some of you might not agree with it, but you can choose not to believe me, but please don't discount what I say. Stay in the market for a couple of years and you feel it yourself. All right, so that is how I'm going to answer this question.
Yeah, that was
Yeah,
a great
so Brian,
answer.
back to you.
All right. Yeah. Yeah, that's a great answer because there really isn't a quote unquote correct answer to any of these questions. It's just what have you seen and experienced in the markets shown you to be the answer to any of these questions. So yeah, that was a really great answer in my opinion. I really enjoyed that. And I hope you did too, because it really did make a practical sense from a logical standpoint. All right. So I have one more, which is, what if you are too late in trend following after it has happened?
Okay, so again, there is always something called continuation buy. There is nothing called too late. Okay, there's nothing called too late. As long as the entry that you want to make and towards a logical stop loss for you, then if the risk is less than 10%, I think it's a good go. Of course, you don't enter a stock when a stock like flies 10% today and tomorrow you're going to chase the high. No. I will try to enter as close to EMA 20 as possible. Now, in an uptrend, when the stock price is, the closer it is to EMA 20, the better or the cheaper it is to buy in an uptrend. So of course, I don't buy at exactly EMA 20. What I want to do is I want to see any price action going up above EMA 20. Okay, like a touch EMA 20 and rebound, or SMA 20 if you prefer to use that. So that is a simple guideline. So there's nothing called too late. Okay, we never know what will happen. Okay, when top glove is 5 ringgit, do you expect to go to 30? No. So if you know that, of course, we see things in a retrospective manner and say that, oh, 30 is the highest. But when it is 10, a lot of people think it's very high, but it go to 30. So right now, if you look back, is buying top glove 10 at 10 ringgit or 20 ringgit late in the trend? No. So we never know what will happen next. Okay. Again, I don't set a limit on how far can a trend goes? Now, the reverse is also correct. Okay, some people say it has dropped enough. If you have the mindset of too late in a trend, it means that subconsciously, when a stock price drop quite significantly to your own justification, you will also think that it is cheap enough to buy. And like it or not, a lot of time cheap stocks can become cheaper. All right. So again, I don't set a bar on how far, okay, a stock or a trend can go. It's like when FCPO is like 3,000, 4,000, you know, ringgit. Who expect it will go to 6,000, 7,000? Okay. So again, don't set a bar. Okay, don't set a bar, and just follow the trend. As long as you have a good amount of stop loss, okay, it's not too big, okay, then I think it's good to go. All right, so I hope that helps.
All right. That definitely did answer the question. Basically, be water, my friend. Be as liquid as you can. All right. So I think that's all for the Q&A session. I think I've squeezed enough of Jeen Hao's knowledge out of him for tonight. After a very long and in-depth session that he gave us. So yeah, let me just close it off with our contacts. If you are interested in any of the products that we offer, like futures, CFDs, and stocks that Jeen Hao has mentioned, we do offer all of them. You can follow our socials here. We have Facebook, YouTube, Telegram, as well as LinkedIn and Instagram, and our website. It's all stated here. But if you would like to take a step further and you want to contact us, you can go ahead and do so. This is our phone number for our branches and our address. So yeah, just leave us a message or give us a call whenever you want to, and we will get back to you as soon as we can. And a big thank you to all of you for joining us in tonight's webinar, and also thank you to Jeen Hao for preparing such an in-depth and really just knowledgeable webinar and lecture, I put it, because it had that amount of quality basically. So yeah, thank you, Jeen Hao. Thank you to all of you. I hope you guys had
Thanks,
a great
Brian.
session. Yeah, thanks, Jeen Hao. It was great to have you, and I'm sure the audience would not say that this was anything less than a wonderful session. All right, thank you all, and I will see you all next time. Good night to all of you, and good night to you, Jeen Hao.
All right, thanks everyone for attending, and see you all again.